What if I told you that crypto could 25x between here and 2033? But it might only 7x, probably a more realistic assumption. How would you react? Would you be overjoyed because, 25x, that's crazy? Or maybe you're going to be more realistic and understand, 7x over the next 8 years means an astounding 80% return every single year over year on your money. That's crazy. That's pretty damn good considering the US stock market only generates around 10% returns on average. Alternatively, some people say, I'm only going to get 7x. If I can't get 25x, why am I even here? If you can flip your 100K investment into $5 million overnight, great. But if you can't, screw crypto, man. Perhaps you're going to say, Lark, that 7x target, it's just not bullish enough. Well, let's check out this chart here from Raoul Pal. Digital assets are mirroring the adoption of the internet, he says. Digital assets will go on to eat a huge portion of the global wealth pie. Whether or not we get to $100 trillion, which would be a 25x from here by 2032 is a different question, of course, but also the topic of this video. I'm going to take a little more of a conservative viewpoint here. This is going to be a very data-driven video discussing on how crazy things could get two halvings out from now. But don't forget, crypto adoption is soaring right now, and nobody really knows how all this is going to play out. Maybe none of us are truly being bullish enough. Right now, crypto is growing at twice the speed that the internet did and is on pace to reach massive market saturation of 4 billion users by 2030. Basically, everybody everywhere is going to have exposure to crypto. We're going to run out of buyers in the 2030s. This is an insane number of people considering we're only at around 1 billion right now. But I think everybody who's going to have NFTs on their phones and a little bit of crypto and a little bit of Bitcoin, their savings accounts, all that kind of stuff. There's a lot of growth to go as the world reallocates money into the cryptocurrency markets, but will it be $100 trillion reallocation by 2032? But for now, I want to show you some very interesting data suggesting that whether we get the more modest 7x returns or a more bullish 25x return, that we're basically going to be going way effing higher, because even that 7x target is way effing higher. Okay, so get ready. Now look, we have a current total market cap in crypto around $3.8 trillion, which might grow to around $23 trillion in our 7x target, which is kind of our base case here by the end of 2032 or maybe sometime in 2033. Now, how do we land at this number? Well, let me show you. But also let me point out that this brings in a lot of assumptions, okay? Predicting the future years out, who the hell knows? Really, I don't have a crystal ball. So just keep that in mind. Anyway, this is the total crypto market cap on the weekly, on the logarithmic scale, okay? Now, if I draw the Fibonacci extension, starting from the 2017 top and measure to the 2018 bottom, you can see at the 2021 top almost perfectly hit the 4.236 Fibonacci extension line. Those were crazy times. They were printing crazy money, all that kind of stuff. Everybody stuck at home gambling on dog coins. Wild. That's a great starting point. So if we repeat the same measurement from our current cycle, meaning we measure from the 2021 top to the 2022 bottom, where's that going to get us? Well, you can see where the Fibonacci extension lines are coming in at. Now, given that the most parabolic phase of our current cycle, which if the 4-year cycle holds up is Q4, if we have an extended cycle sometime in 2026, whatever, it's still ahead of us. Timing, who knows, but these are the price targets. I think that a blow off top to the 3.6 Fibonacci line at 8.8 trillion is very reasonable. Everybody's expecting 10 trillion. So 8.8 becomes like, yeah, we don't quite get to 10, we get to 8.8, which is freaking nuts. That's a 2.3x from here for everything in the total cryptocurrency market cap. So that's Bitcoin to 250K, adds ETH to 15K, adds Solana to $1,000, and all the other things up crazy before that, okay? Now, before we dive deeper on all this topic, a quick word from today's sponsor. Have you guys heard about Portal? Well, it's a cutting-edge platform that makes transferring Bitcoin and other assets faster, cheaper, and simpler. Portal supports atomic swaps between Bitcoin, Ethereum, Solana, and more. No bridges, no wrapping, no custody required. At the heart of it is BitScaler, a technology that scales Bitcoin transactions both horizontally, with more types of transactions, and vertically with more transactions per block, all without touching the core protocol and in a trust-minimized way. There is even an AI investing copilot that delivers personalized insights. And here's some news. Portal's token generation event has just taken place on the 3rd of September. So whether you are a developer, a trader, or you're just curious about the next generation of Bitcoin technology, now is a great time to check out Portal and see what they're building and try out their tech. Links down below. Go check it out. Thank you very much. So back to the topic here. Look, at this point, you might be asking, well, why the 3.6 Fibonacci line at 8.8 trillion, Lark? Why not the 4.236 Fibonacci line at 10 trillion? And the answer to that, diminishing returns. So what we're no doubt seeing across these markets is that returns diminish from one cycle to the next as a total percentage-wise. So I think a touch of the 3.6 line becomes perhaps a more realistic target than the 4.236 line. Now that's our Fib analysis from the last cycle and our current cycle. But all that got me thinking, what if we just keep projecting Fibonacci extensions beyond our current cycle into the 2028 cycle and even into the 2032 cycle to see if we can get somewhere near Raoul Pal's $100 trillion target? If we do that and we continue to assume both diminishing returns and diminishing corrections, then what that might all suggest about where the total crypto market cap is going to land at the end of 2032 or 2033. Well, let's run the analysis together and see what it says. Now, again, understand that several assumptions are built into this. We cannot predict the future, okay? We're working on some very broad stroke models here, okay? But it's only because we're trying to stick as close as possible with the patterns from a historic point of view with the data. Now, let's assume we hit the 3.6 Fibonacci line by the end of this cycle. That means our total crypto market cap tops out around $8.8 trillion, probably in 2026 sometime, and that keeps us in line with the idea of diminishing returns. Also note that we're assuming that the 4-year cycle will, to some extent, hold up, even if it's a slightly extended cycle. Maybe we see the Q2 next year, which is not exactly a 4-year cycle, but maybe let's say close enough, okay? Now, if we enter into a cycle that drags us into 2028, who the hell knows? But that's a different story, and I'm receptive to that. Anyway, this would mean that we enter a severe correction in 2026 at some point, with the bottom coming maybe in late 2026, early 2027. Now, notice I projected a 61% correction by the end of 2026 or early 2026. So why 61%? Well, it's the same idea as diminishing returns, just in the opposite direction, diminishing corrections. Now, where did we get the 61% from? Well, there was an 87% correction after the 2017 top, 74% correction after the 2021 top, so the math suggesting a diminishing return correction of about 61% this time around. Now, if you followed all that, and you generally agree that this is a reasonable presumption, okay? Then we're ready for our next Fibonacci projection into the 2028 cycle, and here it is. Bitcoin's next halving will be in 2028, so the 4-year cycle suggests that the next top in the total crypto market cap comes in late 2029. And if we account for those diminishing returns, then we can expect the 2029 top to hit the 2.618 Fibonacci line. Now, it might go to 3.618, but let's just play with the diminishing returns idea. So we go to the 2.6 Fib line, which means a total market cap at 17.5 trillion around 2029. So that's about a 4.7x over the next 5 years. Again, for all crypto coins, Bitcoin, Ethereum absorb most of that money, with all the smaller cap stuff going up much bigger in price. So for the 2032 cycle, again, we're assuming that the 2030 correction is about 48%, puts us in line with the diminishing corrections idea. And you can see where our Fib extension lines come in at for the end of 2032 or into 2033 when we measure from the 2029 top to the 2030 bottom. So if we continue to assume diminishing returns, then we can expect the total crypto market cap to hit almost 23 trillion, which is the 1.618 Fibonacci line by the end of 2033. Again, maybe it goes to the 2.6 in that cycle, or even the 3.6. We don't know. These are just, far out Fibonacci projections, right? A more optimistic take sees us at the 3.6 line in both cycles, and for the total market cap to hit closer to 50 trillion by 2032. This $23 trillion number should be looked at more like a base case, okay? With 50 trillion being the more optimistic case based on the kind of projections and charts we're looking at. So that's the entire projection, and I don't think that the 100 trillion number by 2032, according to the charts I'm looking at, makes a grand amount of sense. Maybe it's a bit too bullish, too optimistic. I'm open to it, don't get me wrong. I'll love it if it happens, but maybe it's a bit too crazy that soon. Maybe 2040. Now, I can't wait to see a comment section on this, because one group's gonna be down there raging about how this is all just too damn bullish. The other group's gonna be raging about how this is all too damn bearish. But for a moment, just put your emotions to the side and think about what we've done here. Essentially, we've used historical data that's available to anybody, you, me, everybody, and then continued the 4-year cycle theory, accounting for both diminishing returns and diminishing corrections. That's it. So just appreciate this for what it is, and understand that even if we just 7x the total crypto market cap in the next 7 years, holy crap, man, that's crazy. Now, maybe we just grind straight up in an 8-year bull run like the gold ETF did and smash straight to $1 million in 8 years. There's not going to be a bear market between now and then. Maybe. Probably not. Now, is any of this necessarily going to happen? I have no idea. But I think at least it's an idea, a thesis that's grounded in logic and some simple perspective we need to think about. So once again, here's the chart. With all the noise stripped away, the 4-year cycle, using the Fibonacci extension lines and accounting for both diminishing returns and diminishing corrections, suggests a $23 trillion suggests a total cap of $23 trillion by the end of 2033, which is just over 6x, let's just call it 7x from here. Now, just two more notes, and then we'll close up for today. First, if this ends up happening, assuming that Bitcoin maintains an approximate 50% market share of all the coins, that means Bitcoin 5x's from here to around $550,000 per coin, which I've often thought that, probably Bitcoin gets like $1 million per coin by the early 2030s. This thesis doesn't necessarily support that, so maybe it's not bullish enough, and we should look at the $50 trillion market cap by 2032 idea. But that is about half the market cap of gold if we do get there, so it's not that unreasonable, is it? Second, as I've already noted, the entire analysis assumes the 4-year cycle stays intact, which I'm increasingly suspicious of. I'm making dozens of videos about it. You're probably seeing one or two of them, so we also have that to contend with. Let's see where it goes for the rest of the year. Q4 should be very interesting and indicative of how we could see things play out in the next few years. And the first 6 months of 2026 will be the true proving ground. Is it all over? Did the 4-year cycle remain undefeated, or are we in an extended cycle truly? So it'll give us some very important data points to work with. Now, as to whether the analysis that we discussed today is correct or not, I guess you can look back in this video in 7 or 8 years and let me know. As you know, I'll be tracking the data as we finish this year and go into 2026, and I'll be updating you accordingly as we go through time. Can we also just take a moment to appreciate that if the entire market does go just a mere 7x, everyone's gonna get stupidly, ridiculously wealthy. If it does the 25x, like Raoul Pal thinks we could, gargantuan crazy sums of money. And if you take a middle case of around 12.5x up to a $50 trillion market cap, oh man, this is so much money. Anyway, that's all. Thanks. Bye.